These days, anybody with an opinion can have an audience, and you're seeing a lot of instant analysts and 25-year-old life coaches talk about their best stocks. And of course, when you look at what retail investors search for, it's always best stocks. So I think when you're going to identify the best stocks for any category, you need to first define your methodology and then let that select for you, so that if somebody wants to challenge the stocks that you selected, they need to challenge your methodology. So when looking for the best dividend stocks, we look for those that raise their dividends every year for a sustained period of time. So it's in the same way if you're a hiring manager, when you look at someone's track record, their CV, you look to see what accomplishments they've had, and that gives you some indication of how they will perform in the future. And that's what we do with dividend stocks. So a company that's not only paid a dividend, this is very important, but has increased that dividend for 25 years or more is called a champion or an aristocrat. The difference is that an aristocrat is found in the S&P 500. Now, when you hit the 50-year track record, that's double a champion's status, then you're a dividend king. So when we look to find the best dividend stocks that we're going to talk about today, we use a strategy that we've developed over time called Quantigence, and it uses a 7-factor approach. We look at size. We reward for that. Larger companies are better. The number of years increasing, of course, that we just talked about. Payout ratio, that shows their ability, their buffer, their ability to keep increasing when times are tough. 5-year growth, 10-year growth, because we like our money to grow. International sales for diversification. And of course, yield, but you need to be careful there because yield can be a yield trap. So when foreign investors look to invest in our Quantigence strategy, they run into a big problem, and that's because U.S. stocks aren't tax efficient for foreign investors. There's certain taxation rules that come into play that will erode all those juicy returns and all that growth. So our number one request from paying subscribers has been for us to come out with an International Dividend Champions report based on the Quantigence investment methodology. So we released one, but it turned out to be a beta. So we released version 1 in just hours. Hundreds of paying subscribers had downloaded it, and the feedback came pouring in. So based on that feedback and internal discussions, we made a number of significant changes. So first of all, maintaining doesn't count. So a company says, well, we haven't decreased our dividend. That's different from saying we've increased our dividend every single year for this many years. So it really gives them an excuse not to grow their dividend in tough times, and that's when you want to count on your income increasing. So it's increasing consecutively, or you don't get entrance into the club. We had set our cutoff to 15 years consecutive in order to expand our universe. I think that's a little bit too lax. So we moved that from 15 to 20. We then expanded our search to include some additional countries. And interestingly enough, in Ireland and Slovenia, there's a couple great champions. One we found in Australia. We've also sent emails to quite a few companies probing them about missing data regarding their track record. And when it comes to UK investment trusts, we're going to add a section in our report that covers those specifically. So this new version of the report is now available for annual subscribers. And we're going to talk today about the European section of that report. So let's talk about Europe. And I think at least the Americans might be tempted to think that Europe's a handful of countries. It's actually 44 countries, interestingly enough. And here are the regions. I've actually been to all these places. Gibraltar isn't a country, though it's a fascinating place to visit. So when we're looking for champions, we don't just want to focus on population, as simple and intuitive as that might seem. We want to focus on economic potential. So that's what MSCI Europe does here. They take all the stocks in Europe. Actually, this is the mid-cap and large cap, what they call standard. And then they break these down by country, and then you can see the country weighting. So you have the UK at 23%, France at 18%, Switzerland at 14%, etc. However, when looking for champions, you want to examine all the countries in Europe. And here's what happened when we did that. we found a total of 45 global dividend champions based on that 20-year cutoff. So in order to be part of this group, you had to have not only paid a dividend, but increased it for at least 20 years in a row. Of those 45 global champions, 26 were European, and you can see the breakdown here. So 15 UK, 3 Swiss, 2 Denmark, 2 French. So when we look today at the top 5 best dividend stocks in Europe, we're looking at champions. So we're going to use that proper definition today, the 25 years. So if we apply that to this universe of 26 European stocks, 19 are proper champions, or about 73%. Lowering that cutoff from 25 to 20, added 7 companies. All right. So here's a look at Europe. So this is taken from our International Dividend Champions report, and the top stock in this table, so I've X'd out for the sake of paying subscribers, all the names here except the top 3. Now, in top position there, I've crossed that one out because they don't have 25 years. And in 4th place, the same thing. So remember, we said we're going to take 25 years or more. So that gives us 3 names from Europe and then 2 names in the UK. So you see the 2nd place name here in the UK doesn't have a 25-year track record. It's somewhere between 20 and 25. You can simply multiply this number that you see in years increasing dividends by 12 to arrive at the number of years any particular company has consistently increased their dividends. So top 5 European champions, here we go: Novo, Nordisk, Linde, Novartis, Kerry Group, Spectris. Some names that I hadn't come across, and some names that I certainly have heard of before. Here's just some basic data on what these companies do. But what's more interesting is when we start looking at Q-score data here. So this is what we go out, in some cases, opening up annual reports for every year and writing down dividends to verify that, in fact, these companies have consistently increased their dividends over time. International sales, you would take that from annual reports, and we look at their current yield, 5-year compound annual growth rate, 10-year growth rate, and payout ratio. All that data there that you see then produces the Q-score that you see in the table below, right? It's intuitive. These are actually based on Excel formulas, which are included in both reports, our Quantigence Core Report and the Quantigence International Report. So you can calculate this stuff yourself. And going back to that point, if you're going to be some guru and pick the best stocks, you ought to tell people exactly how you arrived at the list of stocks that you produce, which is what we've done. Now, before I get into that, this Quantigence International Dividend Champions Report, it's currently for sale here right below this video, and we're offering at 30% off for a bit. We'll see how long that goes. But we're going to do some more videos on this as well. Now let's look at the 5 names. So let's start with the pharmaceutical firms. Here's a list of the top pharmaceutical companies in the world by market cap. In 2nd place, Novo Nordisk. In 8th place, Novartis. Let's start out by talking about Novo. So this piece here, if you live in the States, you've probably heard some banter around this. Will weight loss drugs kill the fast food business, right? Rather remarkable. You see Krispy Kreme's stock reacting to news of this Wegovy or these other drugs that are being released. The company that's producing them, Novo Nordisk, if you spend some time in the States, you would know this jingle about Ozempic. It's rather catchy, and it's played so freaking often that it's ingrained in your brain. Because the United States and New Zealand are the only 2 countries in the world where you're allowed to directly market pharmaceuticals to people. It's incredible how many pills Americans take. It's just mind-blowing. But Ozempic has around 44% of insulin market share. So 11.6% of people in the United States, or about 38 million, have diabetes. And that certainly has to do with being overweight in some cases. So Ozempic is now the world's biggest selling diabetes medicine. It's a once-a-week injection as opposed to having to inject, once a day, whatever diabetics have to do. And look at this 3rd bullet point. This is very important. It says, for Novo Nordisk, It is the first time that an approved weight management medicine has been shown to reduce the risk of heart attacks, strokes, and cardiovascular death. Boy, is that going to sell well. So not only can you lose weight by doing F-all, but instead of going out and exercising or cutting your diet, you can just take a pill. But also it's going to help you reduce the risk of heart attack. So that's been those have been selling like hotcakes. And of course, Novo Nordisk is having a hard time producing this stuff as fast as they need to. The demand is absolutely soaring for what's called these GLP-1s. It's a hormone that's released in the gut after eating, and this activates that receptor, and then you feel full. And here's the result. So the obesity sales for Novo Nordisk are going through the roof. These charts are simply meant to show trends. I know this is in Danish kroner, so you'd need to do the math to get to US billions. But the point here is look at how strong that is growing, that franchise, and look at the price tag. The list price is $1,400 roughly for a 4-week supply of Wegovy. So that's what, $1,400 a month. And of course, they have a savings program to help people, of course, to get them on those drugs. And when you look at the contribution of these obesity care drugs to total sales, that's the chart here on the left. So you can see rare diseases a small bit, diabetes, as we said, a big chunk of what they do, but look at the growth of obesity care. So, and look at the top line growth for their sales. You could look at this with gross margins of 84%, and this would beat out a lot of popular SaaS names. Simply remarkable. Sales growth expected for this year to be between 18 to 26% constant currency growth. This company is just going bananas in terms of their ability to sell drugs. And on the right-hand side, you can see cash flow and capital allocation. So they're repurchasing shares. And these foreign companies note that they have interim dividends and the regular dividend, I suppose you would call it, but oftentimes you're only getting paid twice a year as opposed to the quarterly dividend payments you see in the States a lot. But just get better at managing your money. It shouldn't matter much how frequently you're being paid. It's just budget better. Moving on to Novartis, so you see their top 20 brands in last quarter accounted for around 80% of sales. They had 73% gross margin. So following this company is easy enough. You just go through their list of drugs and see how sales are going. So there you can see the percent change USD for each drug, and then they provide explanations and whatnot. And it's drugs like this. There's a guy kayaking with a corgi. Everybody loves that, and they're selling some Entresto. Moving on to our third company, so we have Linde. This is the world's largest industrial gas company by market share and revenues. Interesting point here where they break out the more resilient end markets they target, like healthcare, food and beverage, and the more cyclical, so like manufacturing, metals, and mining. Linde is one of a few, I think, two companies that overlap with our Quantigence core strategy. So when you look at these charts from Linde, they show the strength of this company. So they have a payout ratio of 40% that's quite low, and they expect to grow earnings per share at double digits going forward. They purchased Praxair. They were the largest industrial gas company in North and South America. So, and the third largest worldwide by revenue. I think they purchased them, well, you can see that jump here in 2018, 2019. It looks like that deal closed. So nice, strong growth there of dividend, and earnings per share is what fuels dividend. So everything's looking very good for this company. When we look at the next name on our list, we see Kerry. I hadn't heard of this firm. Quite interesting. You can see here different metrics. Their global sales, a third, regional, a third, local, a third, and they target food, beverage, pharma. And when we look at what they actually do, it's value-add ingredients and solutions, and you can see their customers anywhere from manufacturers like Pepsi and Unilever to food service channel names like McDonald's and Starbucks. And what I think is very remarkable about Kerry is when I came across this chart, I was quite blown away. It's not 37 years of dividend growth, 37 years of double-digit dividend growth. Now, that's impressive, especially when you have a payout ratio of 26.5%, which means you've got a lot of buffer there to work with to keep those double digits going forward. So very impressive track record by Kerry. And that brings us to our last name, a firm called Spectris. You can see here sales, they have great geographical diversification, and they break it down by two different business types. But I think the end market sales here, in the percentage of those for the group, tell a little bit about the business. So they're into something called precision measurement. Always these boring businesses seem to do great. Expected medium-term market growth looks like what? About mid-single digits there. So I'd be certainly happy enough with the growth of mid-single digits. That's just probably going to barely get you past inflation. But when you look at the potential they have, so here you can see their dividend per share over time, but look at the cash flows on top from operations and disposals. So they're running it a bit like a conglomerate. You see on the right there how small dividends are, how small a piece they are of this company's total expenditure. So rather impressive list of names that we've talked about today. So in coming presentations, we're going to dive into other parts of this report. So we're going to look at the best dividend stocks in Canada and in the UK. And of course, we have an addition to this report for investment trusts that will be coming down the road. We're also going to touch on some other topics, the safest way to play crypto, and we're looking at a stock that's up 356% in 365 days. We'll look at also a data center stock that's trounced the NASDAQ over the past decade. So in the meantime, I'm going to leave you with a piece here we did on building your own dividend income portfolio. Make sure to subscribe to this channel so you don't miss our coming videos. Thanks so much for taking the time to watch this today.